you've got the idea, it's something that you were interested in and that you think you would use. What did that time look like for you?
What killed us at the end of 2021 was the markets. And this is like something, this is like the Red Sea, they call it.
I'm curious what the next 5+ years for Autopilot looks like.
What we're building is pretty dope. Like if you really think about it and like what this actually is, the potential behind this, I think is bigger than people initially see.
Welcome back to another episode of the Beyond the Wealth podcast. I'm your host, Andres Sanchez, and today I have Chris Josephs, the co-founder of Autopilot, best known for the Nancy Pelosi Tracker. I'm really excited to dive in and learn more about how you started the company, how you launched it, but also, like I mentioned before we hit record, I've got plenty of selfish questions. I think the Pelosi Tracker thing is fantastic. I've thought about it as like an awesome thing to have even before you guys had officially launched it. So I'm super excited to learn more about it and learn more about your founder journey. And thank you for being here.
Yeah, no, excited to chat about it. I mean, like, it's funny, even as a founder, I'm young, I'm 29. It's not like I'm 35. Doing these podcasts and just having general, normal, one-on-one conversations is like part of the founder journey of getting more comfortable behind the camera, getting more comfortable being interviewed, because you really don't get interviewed too much unless you kind of make it big. But We're not that big, but the Pelosi Tracker is big. So everyone loves to come to us and talk about, you're doing this, you're doing that. And these conversations are awesome because it's like, it gets us more comfortable. It gets us more experience behind the camera too. So I appreciate you for having us on as well.
Yeah, of course. And I would say I'm one of the easier podcasts you'll probably go on. I've interviewed over 100+ founders. I don't come with any crazy scripted questions or any hidden agenda. I'm more here to have an awesome conversation, and maybe we impact a few people and a few people get a kick out of the story and maybe go out and start their own business. And I love how you said that you guys aren't huge. I mean, 8.6K reviews on the App Store is not small. That's pretty awesome. And I'm sure that comes with a ton of downloads as well, which we're definitely going to get into. But I'd love to just start by giving you the floor and just letting everybody know who Chris is and a little bit about your journey.
Yep. Yeah. So as I mentioned, 29, we're us as a co-founding team. There's 4 of us, me, Brian, Aaron, and Scott. We're all young, late 20s, early 30s. And we all kind of come from a scrappy background, no Harvards, no Yales, no whatever, no even cushy jobs. We're scrappy kind of founders that like to build things, understand social media, and can kind of hack things together. And then we're taking another step as we're venture backed. But the reason why I'm saying all this stuff is me personally is like I was that classic kid in high school and in early college that would do the drop shipping, that would be the sneakerhead, wait outside the Foot Lockers at 7 a.m. in the morning, have your mom wait in the parking lot, get those Jordan 5s, and then go right to Facebook Marketplace and flip them. So entrepreneurship has always been kind of like something that I've enjoyed. And I think like it'd be interesting for me to get into like the pros and cons, I think, of how that all started. But from there, I had a family business that I ran with my brother, and it turned into actually something bigger than we even thought for that. We would sell sports compression products, but custom ones. Turns out that like the easiest, most lucrative market out there, you could probably guess, is mothers, parents, especially moms, and they would buy anything for their kids, especially the young, teenage and the peewee football kids. So we built a market around that where we would make sports compression products and we would sell them for football and baseball. We were able to scale that up. It's my dad's full-time job. It's called Custom Sports Sleeves. It's great. And what I learned in that was the power of social media. This was early. This is 2015. And what people didn't understand back then is like people were already hacking growth strategies around social media. So you would have things called like engagement groups, and they still do this now, but you would join, like we were in the sports industry with football. We would join together with other accounts that were roughly our size in the football niche as well. And we would restory each other's stuff to get that growth out there. So that was an early sign of like everything on social media. If you can manipulate it, there's a manipulation, I guess, behind a lot of what you see. And that was an early sign. And it's not as simple anymore, but that was an early sign that we saw that taught me with that. But from there, we had that business, as you could imagine, a sports sleeve company. It was my full-time job. I quit my New York City finance job to do that. And during COVID, though, that's not going to work when
Yeah.
sports get canceled. So when sports got canceled, we had to pivot, we had to fix it. And that's when I started kind of focusing in. And I met up with my co-founders, Brian, Aaron, and Scott. They were in Irvine, SoCal. I was up in Boston. And we found each other through LinkedIn, through mutual friends. And we just instantly all hit it off. And when we were initially building out that product, it was this is like the precursor to Autopilot. We all kind of just built a product that we all wanted. And that product was around a social layer for stock investing. And I'm sure a lot of people probably listening here, and especially during COVID, you were all in a group chat. You were all texting your friends. You were all saying, hey, I just bought Apple. I just made 70%. I just bought an option on Tesla, things of that nature. But in those group chats, it was frustrating because there was always two types of people. One, that person that sucked, but you didn't know that they sucked because you couldn't verify it. And two, you would have that person that was really good and you would be begging him. It's like, dude, just tell me what you're buying. Like, I don't really care if I lose money. I just want to know what you're buying and selling. We built out that social layer for your Robinhood, Webull, TD Ameritrade at the time. And that was the first version of what Autopilot was. That was in 2020. So we've come a long way. It's 2025 now. But that is how the four of us started. We started that social investing app called Iris. We were able to grow that. And I can get into the pivot in how we got to Autopilot and Pelosi Tracker, where all that came from. But that's the gist of it. That's how the original founding story started.
I love it. And I can sympathize with you and share the same excitement. I was the sneaker flipper. I was the one on Discord and every community. Actually made more of my money botting sneakers and built one of the biggest rental Discords on the market. We had like 8,000 customers, and COVID, it blew that business to pieces. But it was my first entry into entrepreneurship. And I've shared that same experience like we're sharing now with a ton of other founders, because that was the cool way to make money back in the day. How things have changed. Like you can go into a Foot Locker and buy almost anything now.
Yeah, you guys used to take down the I was before the bots got really big, because you guys essentially took down the entire you would take down Nike. Like, remember when Kanye would drop the Nike the Yeezys before Adidas, the Yeezy 1s and 2s? Like, you guys would crash the Nike sites.
That time was crazy.
Yeah, I take this bet, and I think, like, I don't know how old you are, but you're probably roughly my age, probably a couple of years younger. Like, the same way that the entrepreneurs, 10 years older than us, would always tell those stories as like, oh, I was the kid selling candy at school. I would go around and sell the dog. You hear that story a million times. I think the next version of that, 10 years from now, the world-class entrepreneurs are going to be talking about how they were sneakerheads, how they were selling bots, how they were flipping things on Etsy, how they were doing drop shipping. Because I think the difference is the candy was in person, where you didn't have social media. The best people understood instantly, I can sell candy, but I also can create a bot that scrapes and adds to cart a Yeezy sneaker, a size 10, that I then can go and flip on eBay or Facebook Marketplace later that day. It's like the evolution. And I wonder, probably what now is there's probably some cracked out 14-year-old kids building these. They are honestly building these really easy, simple AI apps and just selling the AI. That might just be the next generation of sneakerheads, because I think the sneakerhead stuff is a little bit died down since our time.
Yeah, and I think there's plenty of young kids doing these AI rappers and making a bunch of money. The other thing that I see these kids crushing at are these TikTok affiliates. They're all making content. They're running up 10, 20K a month. They're 14, 15, 16 years old, and it is just mind-blowing to me. Yeah. And I talk about this all the time on other episodes. I do confidently think that we are living in the entrepreneurial gold run right now. It has never been easier to take an idea and make it a product and go out and start collecting money for that product ever in history. Yeah. And I think we're so blessed to be in living at, and like you said, you're 29, I'm 26, 3 years apart. Like, we are really living in this gold rush of entrepreneurship, and it is absolutely amazing.
Yeah, 100%. In like my younger brother is probably, I think he's 20. He's at Baylor, and he is what I see as like exactly what you're talking about. Just building these random AI wrappers, launching them, kind of having fun with that. The one thing that's interesting, and this is like one of the downfalls that it's good to I want to tell people about, is like once you're in my you're once you it's not like once you graduate, but once you go down that path of like venture backed, where it's like, we have investors. We're backed by Craft Ventures, like legit. We're going to be raising a Series A. These guys are asking big, big questions. You need to remind yourself, like, if you want to go down that path, of just how small the AI kind of wrapper things can be, and you don't want to get caught up in that small mindset when if you are going to try and build out like the next generation of a company, some multi-billion dollar business. The lesson with that was when I would run my sports sleeve business, and Brian and I, my co-founder, we go back and forth on this a lot because ads are just tricky. Ads are hard.
Yep.
Organic is simple, but if you know organic, if you're good with it, once you get into the ads, though, you need to be comfortable with dropping bands. You're dropping tens of, like, we don't spend that much, but we know competitors out there, they're dropping $500,000 a month on ads to rank where we rank, and it's like, I respect it, because what they can do is like they're trying to find that scalable thing, and that's what I'm sure their VC boards want. They want that scalable thing. The hard part, what I had to get out of my comfort zone, was I was never necessarily really used to spending that much money on ads, and I'm still not that good at this. I got to get better at it. And I think part of not wanting to take that on was because with my sleeve business and with the early days of Autopilot, we were just so good with organic. We weren't comfortable with spending $150K a month on ads. And part of that was the mindset of thinking small and not realizing that ads can actually quadruple, quintuple your business. You just got to get to that point and be comfortable with seeing that money go out of your bank account every week. So that's why, like, I'm curious, even with the people that you chat with, I wonder if I want to make sure that people, like, when you're building out those little AI wrappers, don't forget to think big. Because if you think big, your thing will be bigger than you can even imagine. And don't get caught up in a couple million downloads or 10K MRR, things like that.
Yeah, I love that. And I do think that like tons of younger entrepreneurs and even some amazing like older entrepreneurs fall into that trap of like a limiting belief that just creates this wall. And I talked about it recently. Like, this podcast and my newsletter for me were just hobbies outside of work. I'm in tech sales. I do great. And like, I eventually want to leave and have a full-time entrepreneurship. It just hasn't come to me what that's going to be yet. But I do things like this to keep me in the loop, keep me around the people I need to be. And for the longest time, I was like, my podcast is not huge. My newsletters, it's got like 16,000 subscribers, but it's in a business niche that's small. So I was like, I'm not big enough to monetize. And I told myself that for 16 months. And then in November, I was like, you know what? Screw it. Like, let's just see what happens. I made $75 in November. Yeah. Then I was like, all right, in December, I made $250. And then now in January, in the first 29 days of the year, I've collected like 4,100 in ad revenue. I would have, and I haven't grown. It hasn't been like exponential growth from November to right now. I just told myself, like, why not try and monetize it? Like, who cares about the size? Like, it could get big. And all of this revenue, which it's still small, but it's growing at a fast pace, would have not been accomplished if I just kept sitting around saying, it's too small. Yeah. Like, we're doing pretty good. And it really is important.
Getting out of your comfort zone. It's like the comfort zone is like, damn, I got to go and ask people to pay me. Like, and then you start self-doubting yourself. Like, is it really worth it? Am I like, is there returns on these things? Once you realize that there's so much money out there for ads, there's so many businesses out there that just want sort of things like this. People sell themselves short. So yeah, what you're talking about is exactly the same thing that, I would go out. It's like, do I really want to run an ad for Nancy Pelosi stock tracker? Like, is that really valuable? Turns out it is, and turns out they're lucrative. And now it's just like, how do we now make these things cool ads where they're not, the everyday run of the mill? For you, it's probably like, cool, people are paying me now, and like I'm providing value. How can I take that up another notch so that we can kind of keep compounding that value add for those people? It's cool. It's a good skill set to have, and it's like a learning experience that I'm going through right now.
Yeah, it's fun. I mean, like that's why people get into entrepreneurship. Like you got to push yourself out of your comfort zone. You've got to go out and do some of these things that make you uncomfortable. But I can't really think of a better feeling than doing something uncomfortable and getting great results from it and being like and having like a breakthrough of like, holy shit, like this works, or like, wow, like what I've been thinking about for a while actually is a good idea. I was just too shy to bring it up or say something about it. And I always encourage younger people to just fucking do it.
I got, if you were to tell me that the Nancy Pelosi portfolio on autopilot would have $300 million of real investor money investing alongside her, get featured by ABC, be on Fox News every other day, go on these major podcasts, I would call you crazy. Not necessarily crazy because like, not because of me. Like I'm a gritty guy. Like I always like my goal in 2025 is big goal. I don't want to say it out loud because I got to be able to build it into fruition. But
Yeah.
I would say it's crazy just because of the idea of like how many people would actually want to invest alongside Nancy Pelosi. And what was cool about that was you got it when I thought about that is like how do you take the approach and actually make it worthwhile? My mission with all of it, it's always been mission driven. I didn't expect the Pelosi tracker to get this big. And honestly, it shouldn't. It should not be allowed. It should be banned. Our goal from the beginning, we've been very vocal and open about it, is to try and build it to get them banned from stock trading. And I know a billion reasons why it's complicated, this and that, but starting with that mission has been a major key piece of why I think it's been so popular, and also why the app has turned into like a rallying cry for the masses. And also it's like why people are copying the app. It's a great spot to be in. Whereas like when you see other people kind of coming in and working with it, I love it. It's like perfect. Yeah, get more eyeballs on it. Create the movement. Now that AOC is talking about it, now that they have actual bills out there, Ro Kahana, things of that nature. But it never would have started if I didn't take the leap of faith saying like this idea can't be right, but I'm still going to try it anyway.
Yeah, and I am fully in agreement with you. I do think it should be illegal. It's pretty ridiculous that it's not illegal, and we can definitely go into more detail around that, like when we talk a little bit further about the Pelosi tracker. But I want to pull us back a little bit and talk about the early days, like when you're launching this with your buddies. You've got the idea. It's something that is something that you were interested in and that you think you would use. What did that time look like for you?
Yeah, so when we were going from the transition, this is early 2021. We had a great product. We had a great distribution channel. What killed us at the end of 2021 was the markets. And this is like something, this is like the Red Sea, they call it. When markets are going up, everyone's telling everyone about trades. It's all on TikTok, it's all on Twitter. Everyone's loving it because everyone thinks they're Warren Buffett. When the markets though tank, you don't care about sharing your trades because you're not going up. You also don't care about other people's trades because they're not going up either. At that point was when we had the realization of like what we were building was a little bit too feature heavy. That social layer wasn't necessarily working. It was hard to keep retention because, if I get my friend in, I need to get my other 5 friends. It's hard to get your 5 friends who are not 15 onto an app. So we started chatting with users. And what the users essentially said and what the data said, they wanted 2 things. And looking back, it's pretty obvious. One, who are the best people? Like, who are just the best traders? I don't care about the 95. Just tell me the top 5 are. And 2, how can I just do what they do? I'm doing podcasts. I'm at work. Like, I can't be actively keeping up with their trades. Can I just automate it? Can I just follow what those top 5% of people are doing? And that's where we pivoted to Autopilot. Autopilot essentially became the platform that allows you to automatically invest alongside the trades of the top people from Iris. And at the time, it was the Pelosi Tracker. And where the Pelosi Tracker started was from TikTok. We saw there was this massive wave of people talking about it on social media. And I was like, fuck it. I wonder if, because I'm in charge of growth, I do all the growth for Autopilot. I was like, I wonder if people on Twitter or TikTok would be interested in it. I made a TikTok about it. Next thing you know, the thing blows up. We chart for the first time in the App Store. NPR reaches out. We have a conversation with them. And then I realized, like, there's something here. Like, once you get the early signs of it, you got to just keep going with the momentum, cut off the distractions, focus on that one thing, and then let the other stuff figure itself out. Maybe you come back to it. But around early 2022 is when we pivoted to Autopilot. And it was on that thesis of, the pivot. Every startup guy goes through a pivot. If you're not pivoting, you're not probably pushing things enough and you're not moving fast enough. Because if you don't get to that point where it's working or not, the early signs of product market fit, you better drop everything to get to that point. When it happens as well. And we knew that it wasn't working at the end of 2022. And Brian, to his credit, took on that challenge of pivoting the entire company, the entire team towards that. And then we built. And 2022 was, with the market being down, it was a perfect time to build. Let the market fall 50% while we build out the technology, while we build out the distribution. And while all that was going on, I was building the Pelosi Tracker on Twitter. I was tweeting about it. I was getting a following. I was getting an authority. I became sort of an expert in the space. And we were pushing pre-orders for the app. When 2023 came around, we officially launched it the first January 27th, 2023. And the whole thing just flew. We became top. I think we were number 2 in the finance category, top 15 in the entire app store because we were building up these pre-orders. We made around like 350K, 400K that day. And it's been like that ever since. But the lesson in that was every part of the startup has to constantly be moving, and you can't wait and make an excuse for your part to not be progressing along. Like I could have said, we'll build the Pelosi Tracker once the app is out. Once the app is out, obviously you want to push. But what I said was look, let's just keep building out that distribution while the engineering team is building out the app. And then once the app is out, that distribution will already be at a couple 100K and we'll be able to grow much faster. And then that was essentially how we started. And we got, top 15 in the app store. And that gave a lot of credibility and validation to the idea that we knew we were onto something early from there.
And that's a fantastic lesson on and I think it's something a bunch of people fall into a trap of just because the core product or whatever it is isn't officially ready to go. So many people wait to start rolling things out when it's live and just don't put any stock in momentum. And momentum was clearly the needle mover for you guys on top of just having a really good product that people loved. And I love I similarly had a 2022 issue where I was so big on Discord. I had all these big Discords. I was like, I'll just launch a stock Discord group. This is easy. I could just hire traders and different things. And me and my partner, we built it up to 7K MRR in the first 2 months. And I'm like, dude, we got a serious thing going here. This would be a 20K a month business in no time with $1,000 a month in overhead. And then the market dipped, and then nobody cared about anybody's trades. And we went from 7K to 2K in 30 days. And then it was all right, scrap the business. One thing that I'm curious on is and I'm very naive on this, when Nancy Pelosi places a trade versus when I make that trade, what is the time gap? Because I know I know they don't have to disclose it the second it goes live, or maybe they do and I don't know. I'm curious on that.
They don't. So this is per the Stock Act. The Stock Act, and I'll get into Pelosi, but I feel like this blows my mind how this works. But so the Stock Act is a legislation that passed in 2012 where any politician that makes a trade, any politician's spouse or dependent makes a trade, that politician has up to 45 days to file that trade. So there is that delay. Before that, before 2012, and this gets into the ridiculousness of it, they were able to do whatever they wanted. So like they didn't have to file anything. It was essentially just like insider trading, wild, wild west. The Stock Act literally stands for Stop Trading on Congressional Knowledge. Like that's what it stands for. Stop trading on congressional knowledge, which means before that they were able to do it. So yeah, the Stock Act though allows them to file their trades up to 45 days. Nancy Pelosi in particular, she on average we see, and it fluctuates based on the filing, she takes usually around a week to 2 weeks, a delay from when the trade occurs to when she files. An example, this happened this week. On January 21st, the inauguration of Trump, she disclosed $38 million worth of new stock trades. When you look into the filings, though, those trades happened, and there were 7 different trades. Those 7 different trades happened over a different period of time. So she sold a couple trades. She exercised call options in Palo Alto Networks and NVIDIA on, I think, like December 20th, 21st. And then she sold some shares in Apple and NVIDIA on December 31st. And then on January 14th, she bought new shares in Tempest AI and Vistra Corp. Those are 2 brand new positions. Stock filing comes out a week later on January 20th. So like when you ask for the delay, the trades actually occurred on January 20th. But, you know, the fluctuation of the dates that she actually made the trades is dependent on that. Now, the next question, though, that everyone always asks is, like, does that affect returns? You know, like what does that mean? Are you missing out on the boat? Now, obviously, each trade has its own. You know, sometimes they benefit, sometimes they don't. You know, for example, she bought Palo Alto Networks back in February of 2024. 2 days later, the stock fell 20% because of earnings. That filing, though, came out after that earnings. So everyone on Autopilot was able to buy in that same stock at pretty much like a 20% discount to what Pelosi bought. That benefited it. A lot of what we see kind of evens itself out. But since we've been tracking her filings, so her filings, not her actual trades, since there's so many dates. Since we've been tracking her trades since July 7th, 2021, that was when we started it. Her portfolio, if you autopiloted from that same day, you'd be up 95%. So even with the filing, you were up 95%. The SPY's only been up 30%. And we see this with Dan Crenshaw. Dan Crenshaw's beating the market even with his filing. So the delays matter, but from what we see, the majority, they buy and hold anyway. And you're betting in the thesis of like, they may know some things that we don't, and they're not actively trading them per se. Now, the other problem, sorry, I'm rambling, is like if they sell. Selling is trickier than buying. But again, what we've seen is like she sold Apple. Apple's still up since she sold. So it's not that bad, but yeah, it is still ridiculous. Like, why is there a filing? Or why is there a delay? I have no idea. Like, they could file it the same day. There's no reason for it. We'll see if that gets passed or if that transitive messaging comes into effect though soon.
Yeah, it'd be nice. Like, it'd be nice if we got a little period where they had to file immediately before it went illegal, so we could really take advantage of all these gains. Another thing that I'm curious on, and like, so from a user experience, I'm listening to you right now. I'm listening to our conversation, and I think this is awesome. What does it look like? I go on the app, upload money, and just click the portfolios I want. When there's options involved, like, how does that work? Like, give us a rundown on a user side.
Yeah. So what we're building is pretty dope. Like, if you really, really think about it, and like what this actually is, the potential behind this, I think, is bigger than people initially see. So to answer your question on the options, we don't do options autopiloting just yet, mainly because options are low float. You could pump those things. We don't want to get into that world. And also you need more money. So what we do is we buy the underlying stock. So Nancy Pelosi, she's buying NVIDIA call options. We're just buying NVIDIA shares to make that thing simple. The way that the product works, though, is what's cool about what we've built is, again, and we built this essentially for us. When we started, we didn't want to build like a copy trading platform with another broker. Like, let's be real here. You probably have a Robinhood. You probably have another one. You might have a Fidelity. You might have a Schwab. it's really, really hard and annoying and inconvenient to open up another account, transfer more money to that platform. You'll probably only will start out with $500 and you got to transfer more money. And when the majority of your money is in your Robinhood, it's just hard. And
Yeah.
like we do with this crypto. I don't know how many crypto apps I have, but it drives me nuts. I didn't want that. We didn't want that at the time for Autopilot. So what we do is we actually integrate directly with people's brokerage accounts. So I have right now, say a $25,000 Robinhood account. If I wanted to autopilot Nancy Pelosi, I download Autopilot, I read, and can't beat them, join them. Cool. I want to check it out. Pelosi's crushing it. Download the app, register, select the Pelosi portfolio out of the different politicians and different pilots we have. See her holdings. I like them. Click through, and then you get into this page where you connect your personal broker. So I have a Robinhood. We have Robinhood, Fidelity, Webull, things of that nature. But I go in and I connect my Robinhood. I put in the credentials. We use the APIs. And we don't have a formal partnership with them. So let me be clear, like they're not endorsing it, for whatever. But we do have a working relationship, and the product works. And then you just essentially have it now connected to your Robinhood. And then say if out of that 25K, if I want $10,000 to autopilot Nancy Pelosi, I allocate 10 grand. I click trade, and then that $10,000 automatically does whatever Nancy Pelosi's does. And it's all based on fractional shares, so you can match up the portfolios. But and then any future trade she makes, my $10,000 will trade that too. So like I said, on January 21st, she opened up a brand new position in Tempest AI. Everyone autopiloting her instantly automatically bought that stock too, and they didn't have to click a button. They didn't have to do anything with it. That's like the way that it works. It's built for convenience. It's built for ensuring your money stays in your control. No one wants to, we don't take custody of your assets or anything of that nature. And that's roughly how it works. And we are a registered investment advisor. So we're working with the SEC to get all those qualifications done, and certifications.
That's new news, right? That's a new breakthrough for you guys.
Yeah. So when we initially started, we weren't registered. When we pivoted, we knew we wanted to be. Like the SEC gets a lot of slack. SEC is not like this evil body. I know that they have issues, but we wanted to register with them because it's like every professional, legit company should be registered with them, and we wanted to take that maturity step, which is why we did it. And also because I think our product in the future, it works with our product roadmap to come. Because I can tell you what we're going to do with all that stuff.
Yeah, right. I'd love to hear what the roadmap looks like and what you can share. Obviously, I'm curious what the next 5+ years for Autopilot looks like.
Yeah, so this is where I think it gets cool. And we already have this on the platform now. People are going to know these names. It's dope. I think it's honestly sick. We don't have access to these high flying strategies that these hedge fund guys have. We don't have access to these $100,000 minimum registered investment advisors whose RIAs have access to these cool strategies, the Bill Ackman stuff, things of that nature. With Autopilot, we see the potential to bring that to the masses and democratize access to just not only the world's best investors, but also the world's best strategies. So going back to the technology, if you really think about the core first principle of what we built, and this was all by design. My Robinhood right now is autopiloting Nancy Pelosi, but it's all just roughly the same. Now, though, we have partners with creators and Unusual Whales, Quiver Quantitative, Liquidity. They have strategies up on Autopilot where now their community and anyone from our community can go in and invest alongside those strategies. So a portfolio that I love is I use it personally is like Quiver Quantitative. They have 2 million followers on social media. They're awesome. They're honestly, I think, like better than the Pelosi Tracker to some degree. They have an account called the Lobbying Portfolio. That portfolio, based on their data, tracks which companies are lobbying the most in DC. So, they got Meta because Meta would lobby this much money, et cetera, et cetera. You as an everyday user, you'd have no fucking way to do that on your own. And if you like that strategy, like that's cool, that's interesting. You now can go on Autopilot, select the Quiver Quant strategy, and then you are essentially buying into that strategy. And then they do the data, any changes that they do on a month-to-month basis, your money instantly changes too. It's like a pseudo ETF for the next generation. Another kind of cool strategy, and this is where you get into the launching of it. Now people can launch their own strategies, and it's not open to the public because we only want to vet and make sure the best people are on it. Like if you're Joe Schmo on Twitter, maybe you eventually will be able to use Autopilot, but like right now, like we don't know who you are. We want to make sure the best people are launching strategies on Autopilot. One of those best people is Unusual Whales. Like he is a tremendous, tremendous account. He's done a lot for the political stock trading sphere, and he has these portfolios on his platform. But he also is really smart with how he sees the world. So he came up with this strategy, and we worked together on it, where he launched a portfolio called the Trump Inauguration Fund. And that portfolio tracks the top companies that invested in Trump's inaugural committee, essentially. Robinhood, Hims, Amazon, Google, things that people like that. And his thesis is like, essentially, do companies that try and buy favor with the presidency outperform over that 4-year span? Interesting, right? It's cool. Yeah. It's like, that's a cool idea that I've never really thought of that I would be interested in putting some money behind. I can go on, put a couple grand behind it the same way I put a couple grand behind the S&P 500. He now has launched that strategy though. So now people can go in and invest in that fund. And he's not managing it, but he's overseeing it because we as the RA are the one managing it. But now essentially you're democratizing access to that strategy that you've never been able to do on your own. And for Unusual Whales, he loves it because he's like, I can do more of these sort of spin up these portfolios that my community would like, and I can now launch them in Autopilot in a matter of 5 minutes. That I think is powerful, and that's revolutionary because you're essentially redefining access to strategies and launching of funds, for lack of a better way to describe it.
I think it's awesome. And like I'm thinking in the back of my head, like how much cash do I have in my portfolio right now that I could go and launch into one of these like awesome ideas. So like from your guys' perspective, how do you make money? Like you're obviously facilitating a lot of the trades and connecting with all these brokerages. Where does the revenue come from?
Subscriptions. So we do a simple $30 a quarter, $100 a year subscription for those that autopilot certain portfolios. If you want some of these higher advanced portfolios, it costs $90 a quarter, $300 a year. But also to be transparent and clear, like some of that money is going to Unusual Whales and QuiverQuant and their ability to do these things. So you're also kind of like you're supporting your favorite creators. Like Liquidity has an account called the Liquidity Alpha strategy. And he created also another one called the Basic Becky and the Finance Chad Index. And he's like, these are the companies that are culturally relevant in the finance bro, finance gal community. And he created an index around it. People can go in and invest alongside it. He gets us a revenue cut of each of those subscriptions. So he's happy with it because now he's building out an actual sustainable revenue business on the side of his other stuff he has going on too. And what's cool about that is like going back to our initial conversation, imagine all the people out there that, you would vet them. You can't just launch anything, but there's a world where you can get 10,000 people to build out a couple $1,000 business of MRR by just having conviction, doing research in stocks and seeing if they can build a community around it. Like there's potential here with this, the same way that Beehive, Substack, et cetera, built out that quote unquote newsletter market. There's potential for us to do the same, but in the finance category. But obviously it's got to be vetted. There's compliance. It's not that easy, but there's potential for a brand new market here.
Yeah. I'm even thinking like there's so many trading communities on Discord that have thousands of members. Like why would that owner, if they're really a good trader, why would they not pursue your model where they have no community upkeep that really needs to happen? The members that like their trades can just subscribe to them and copy and follow all the trades. Like it seems like you're almost like taking that whole world of the way you used to have to get this type of information that wasn't public. And now it's just an easy little subscription that you sign up for and you just load in money and shit starts happening.
Yeah. Yeah, you would think it'd be that simple. The hard part is a lot of these traders, and this is again why we're not opening this up. We're not guaranteeing performance. We're selling convenience and the ability to make sure that your money invests in the future that you want. Kind of, we have bigger aspirations on the brand that we haven't really gone public with yet. But the hard part with those Discord guys is good luck convincing them when they're already making $30K a month. It's like they're making that much money, and you don't know really what's going on with those. They could be doing things behind the scenes. They could be sharing wins, no losses. So convincing the traders at scale is hard because of the sacrifice of fucking up and being bad. That's why we've taken this approach of like, we only want to work with the best. And right now we have Quiver Quant, Unusual Whales, Liquidity, Adam Leach from YouTube. He's a tremendous, transparent guy. And we aren't selling Wolf Financial. He's on it. We aren't saying, hey, you're guaranteed to make millions. We're selling, hey, we're building out strategies and that we find people with high conviction that have some money behind their stuff and want to provide that access to their community. Come in and invest alongside if you want to do that. If you want to make millions and you want to, turn an zero DTE options contract into $1 million, like that's probably where you would go and pay the $100 in the Discord server to see if you could do that. With Autopilot, it's just not for that just yet.
Yeah, and shout out Wolf Finance. He was my second interview on the podcast.
Hell yeah.
Many moons ago. And yeah, he's a really awesome guy.
He's making moves. He's a spaces king. Maybe you should hit him up after he kind of launches this thing.
I used to do spaces. So like, and you and I can talk about this off camera because it's not something that I share. But I was like huge into like posting my moves on Twitter and all these things. So he started inviting me on spaces, and it was awesome. But like, it's not my full-time job at all. And I would sit on there and I'd get roasted by some adults talking to me about technical analysis and why I shouldn't pick this and that. And I was like, dude, I'm doing just fine. And my portfolio was up 47% last year. Like it was okay.
No, 100%. Yeah. And that's also like my point on, for all the founders out there, it's like your time and energy is important, and really having the right taste and the right direction of where you want to go will save you a lot of time and effort. Like, because a lot of people have told us about the Discord people and a lot of the traders on Twitter. It's just a different breed. And Discord, WAP, Patreon, they make a lot of money already. And like, it's hard to convince them to do that. We would rather just find the best people. And like Gav, I think, is a great example of this too. Gav's out here and he's not guaranteeing you to make $1 million. He's just like, I think the idea is cool and I want to see if I can, build a following around this. That's, I think, like the direction. So, and that's what we have been able to say no to, a lot of those kind of things, because to your point, I chatted with them for a couple of days. It's like, this is a headache. This is a nightmare. This will never work with some of these Twitter traders.
Yeah, I agree. Like, I think you guys are pursuing the right model of like, I wouldn't be quick to go on there and like start tracking some random guy I've never met in my life. Like, but I would be quick to follow a politician that I have data on them being a constant winner. I would be open to doing research, understanding a strategy, and making my own decision, being like, that's a really smart idea. I don't have the time to sit here and execute that strategy to perfection. You guys have now made it extremely simple to go ahead and start doing that.
Yep. And remember, we don't take your money. If you ever want to cancel, you just click a button. Like that's the other part of why we built this thing, the convenience first. Like the worst experience is like when you transfer money out or you go open a new crypto thing or you go to a bank or you go to another app and it's like, I don't want to use this anymore. And it's like, God damn it. Like they're going to make my life impossible to get my money back. Like that's where this stuff gets hard. And we wanted to build it so that you don't have to do that. So you can start with a click of a button, but you can also cancel with a click of a button. We don't want you to cancel, but like we'll die on that hill of, okay, at least we made it convenient for you and you're not going to put your head through a wall trying to get your $1,000 back.
Yeah. One thing I'm curious, like if you could tell or talk to a founder listening right now that's in the very early stages of their career, what would be a big piece of advice you'd give them?
Yeah. I mean, there's a one could be, and I don't know if this is the major one, but like distribution first. Like you understand that you can build the best product in the world. You know, people always, Sam Altman says this, build the best product and people will come. It's like, yeah, if you got $5 billion, you know, or
Yeah.
if like you already are Sam Altman, you know, like I see a lot of these accounts on Twitter, and it's like the biggest realization is people don't know who you are. People don't have any reason to want to stop and follow you. And just because you built an app that's cool, no one's going to care. You know, you got to figure out a niche in a little wedge. Nikita Beers did this tremendously. Like he's one of the kings at that. But like I think the bigger piece of advice is action. It's like you can wait. You can come up with any excuse you want of why this won't work, why that won't work. Oh, this pixel's not perfect. This is not that. The only way you'll learn is by moving forward. And if you're going in the wrong direction, the only way you'll know that you're going in the wrong direction is heading towards that. Because the faster you get to the realization that you're wrong, the quicker you can revert and get on the right direction. So I see a lot of founders in especially like in our world because we've had success. And again, people think we're bigger than we are. Like, we are pretty big, but so they think that oh, we've cracked the code. A lot of it just has come from action and making sure everything is compliant, making sure that all the legal stuff is right. But and then just like staying up all night doing something, pushing it forward for the sake of not to see if it will, change the trajectory of autopilot, but just to see if we can have any learnings that will help us towards that path of building like this $1 billion company. And I think people get action paralysis and they
Yeah.
overthink and they stop and they end up, next thing you know, it's April 1st and it's like you still haven't launched. So just get the thing out there and ensure that people aren't going to download it just because it's you. You got to like crack the code a little bit more.
Yeah, I love that. And I've been wide open about it. Like, I'm one of those people that falls into that trap sometimes where I'm overanalyzing the shit out of something that doesn't need to be overanalyzed. And on the other hand, I've got somebody that I do business with, my best friend since we were 5 years old. He's built a massive cigar company over the last 3 years. It's like one of the fastest growing boutique cigar brands. And
Well,
the one thing that I've really learned from him is like he's all about action, like all about just doing shit. And if it doesn't work, fine, scrap it, move on. What's the next thing? How do I iterate? How do I change it? How do I make it better? And I look and I've seen the success he's had over the last 3 years, and like at least from the outside looking in, that's my number one takeaway on like why he's been so successful. It's just constant action all the time. And I've had a good amount of founders just like yourself who have been really successful mention that as well. And like too many people get stuck in like the thinking through things and is this a good idea? Is it the right thing to do? This, that, or whatever. Just go do it. And like
yeah.
you'll get the answers you're looking for. And it's not that hard to pivot.
And if it fails, no one cares. Like
Yeah.
that's the other thing too. It's like you think like people can make all these things in their heads, like, oh my God, my reputation will, I'll be embarrassed by it. It's like no one even cared to begin with. Like just go do it. See if these things will work. Have fun with it. Learn from it. Move forward. And I struggle with this for sure. Like the ads was a part of that. I was probably too late with our ads. I'm fully admitting it. And our team, like I admitted that to the entire team. Like you know, as a lesson, I think I was afraid to take that leap with it and I didn't want to move on it. I was happy with our organic growth, but and we're not spending that much money in ads, but now we've been able to use that to build leverage for the pilots and this and that. And now we're probably ranking top 20 in the App Store now. And we're only a team of three content people. And we don't call ourselves marketer. We call ourselves content guys and girls. But we're not a big team. We're outranking Wells Fargo, and it's like we don't have a big budget. We don't have a big team. We just move.
Yeah.
So
I love it. I always ask a question at the end of every interview, and maybe the answer is similar to the one that you just gave about for an entrepreneur, but maybe it's not. I always like to ask founders, like you're 29, what would you go back and tell the 18-year-old Chris now knowing
Yeah.
everything that you do?
I'm telling you, it's think bigger. I think it's like I came from Worcester, Mass. I no tech. I didn't know anything about VC. I knew about finance and this and that. But like when you're young, my parents weren't rich. We didn't come from that much. You hear a couple grand, you hear $5,000, and you're like, holy shit, that can change my life. Like that at that time, that would. If I thought bigger, I think like at that time when I was younger and realized like $5,000 you can make a TikTok video, even though we didn't have TikTok, but like $5,000 should not be like what I'm happy with. I should be aiming for 50, as passive income. I think I would have been a lot farther and been more successful with my endeavors with the sneaker trading, etc., and not have been so satisfied with the smaller amount. And I think it was because of that mindset of not thinking big enough, just being happy and thinking that I was on top of the world with $5,000 when you realize people are doing more, they're having more fun, they're scaling things. Like an example that I always have for that sleeve company, we did our own customer service for the longest time. And it's like, why? Why did I not just go hire someone, take that money, take the cut, but free me up to do everything else? And that massively hindered my mindset because I was just getting burnt out for years doing the freaking customer service. And it's like looking back, like what the hell was I thinking? Um, Things like that, because I wasn't thinking big enough. I was happy with the 5K. I didn't want to lose any more of that. When if I just saw that I could get bigger, that would have forced me, again, action, to hire a virtual assistant, get them to do customer service, and then that 5K then becomes 10K. And then it's like, let me go hire an ad guy. That 10K becomes 20K. Next thing you know, it's the underlying business is no different, but the mindset of thinking bigger allows you to scale it. And that would be the biggest advice that I would say to myself at 18 is just think bigger.
I love it. And I really couldn't agree with you more. All right. Where can people find you? Where are you most active on? If anybody's listening, watching, and they're interested in connecting with you and reaching out, what's the best platform?
Yeah, so we're big on all of them, which is funny. So on Twitter is probably where I personally am the biggest, or I talk the most. That could be Chris J. Josephs. You can DM me. I answer them all. I see them all. I don't really tweet too much because a lot of my time and effort is on the major accounts. We run the Pelosi Tracker. I answer all those DMs. That's also on Twitter. If you guys are on Instagram, I run the Politician Trade Tracker. It's like people don't really know that that's associated with Autopilot. That thing is almost as big as the Pelosi Tracker, to be honest. But I answer all the DMs there. The Autopilot page, I probably do need to build out a founder Instagram. Again, this is like just me not being afraid of action. Like I don't want to put myself out there.
Yeah.
But I'm sure it'd be beneficial. And then on TikTok, I'm Chris J. Joseph. So we have probably 250,000 followers there as well. But Twitter's probably the easiest and the best. And then also all the Join Autopilot accounts you can find there via Join Autopilot across all of them.
Awesome. And for anybody listening or watching, we'll have all of that link below wherever you're tuning into this. I encourage you to go reach out to Chris. Go check out the platforms. Go check out the products. I know I'm going to go and do that because I personally think it's a badass concept, and I'm kind of pissed I hadn't been jumping on it early because I'm somebody that's big on investing. But
Yep.
Chris, man, thank you so much for coming on the show. Thank you so much for sharing a lot about your journey and being really transparent about the whole process.
Yep. Yeah. No problem. And it was, again, thank you because these things help me. Again, it's all like a learning experience. I would never have thought that I would be where I am now. I still don't even think we're successful. And meanwhile, we're wake up every morning and you're top 20 in the app store, and it's like people would kill for it. And also, just to be clear, just on the compliance side, like none of this financial advice. We're a registered investment advisor. Everyone has to do their own research. We're not recommending portfolios like the Pelosi and stuff like that. But I would, come check it out. It's a cool product. You don't have to start with it now. We're not going anywhere. And if you guys think that there's things that we could do better, DM me on Twitter and we'll answer them all.
I love it. Everybody, thank you so much for tuning in and sticking with us. That is the end of the podcast, and we will see you on the next one.